In our last video, we showed how Heikin Ashi candlestick chart works and how this chart pattern can give traders a visual guide for finding the trend. We explained in detail how to identify the bullish and bearish trend with Heikin Ashi and when a trader should avoid using the Heikin Ashi candlestick chart. If you haven't watched that video, I strongly suggest you watch it first. The strategy in this video is going to use the concept from our last video. So, to understand the strategy, it is important that you understand the Heikin Ashi chart pattern properly. In this video, we are not going to waste any time explaining what the Heikin Ashi candlestick chart is and will dive right into a strategy that is easy but very effective and gives the traders great entry points for amazing profit. So, if you're interested, please watch till the end and subscribe to the channel for more trading strategy videos. In the last video, we showed how the Heikin Ashi chart shows the uptrend and downtrend. However, forming a sustainable trend is more than just a green or red candle. Many times, you will see there is a large green candle bar, but the uptrend does not form. Similar situations can happen on the downtrend as well. To avoid such false breakouts, we will introduce another very common and useful indicator. This strategy is a three-step process. Let us begin explaining each step of the strategy. Step 1. Using exponential moving average or EMA for trend identification. An EMA line gives the trader an overall sense of where the price is heading. The period of EMA signifies the smoothness of the trend. If the period is too small, the EMA line basically moves along with the price bars and does not give us any clear idea about the trend. And if the period is too long, that does not help us either with swing or short-term trading. So, for this strategy, we will be using two EMA lines. One with 10 period and the other with 30 period. 10 period EMA gives us the short-term price trend, while the 30 period EMA line indicates a longer-term trend in price action. If the price is below these two lines, then the market is in a downtrend, and if the price is above these two lines, then the market is in an uptrend. First, we need to know when to enter a trade. And for that, we look for where these two EMA lines cross. If the short-term 10 period EMA line crosses above the long-term 30 period EMA, then it is a potential breakout to the upside. And if the opposite happens, then the price is heading for a downtrend. Step 2. The trend in the market must be true at the higher time point. If we are trading at a 1-hour chart and 10 period EMA crosses over the 30 period EMA at the 1-hour chart, before we can declare it is forming a trend, we need to check at a higher time frame, such as a 4-hour chart. If we also see the price is following an uptrend and is making higher highs, then we can be certain about the uptrend. Similar step for downtrend as well. If the 10 period EMA crosses below the 30 period EMA on the 1-hour chart, we need to first confirm on the higher time frame 4-hour chart that the price is below both short and long-term EMA to confirm the downtrend. And finally, step 3. The Heikin Ashi chart pattern. In our last video, we showed the Heikin Ashi candle chart pattern to learn about the uptrend and a downtrend. To recap, when we are looking for a price reversal, the candle bars start to have wicks on both sides and the candle body starts to get smaller. At some point the candle body is too small, which is known as the doji candle. This candle represents the market is about to have a reversal and the buyers and sellers are about to flip their roles. Once we see a doji candle, we wait for a few solid candles to confirm the trend is forming. Now, putting everything together, this is how the strategy works. For a long trade, first, we need to look for short-term EMA crosses over the long-term EMA. Next, we check a higher time frame to see if the price is still following an uptrend in that time frame. And finally, we check the Heikin Ashi candlestick pattern. If the candlestick shows strength in an uptrend, that is our entry point for a long trade. Like the long trade, a short trade works similarly, but the opposite. We look for the short-term EMA to cross below the long-term EMA. Then we check if the price is following a downward trend in the higher time frame by checking if the price is below both the EMA lines and the Heikin Ashi candle bars forming a strong downtrend. This is our entry point for a short trade. This simple but effective Heikin Ashi and EMA strategy can be very powerful for all the swing and short-term traders. You can easily set this up in your trading platform and start applying this strategy to make some great profits. I hope this was useful and you learned something new from this video. If you did, please like the video and subscribe to the channel. We appreciate your support immensely, and your support is our encouragement to make more videos. Thank you for watching.